Welcome to TradeTheNBI.com. This is John. This report is for the 28th, where the market pushing back up towards the highs, likely to break it today. This was consistent from the S&P as far as magenta over yellow right here, and we had the crossover that we were looking at for DOC, green over cyan, and cyan could actually end up below red if this continues, and that would be your second run to new highs, again climbing this wall of fear. However, there's a problem here. You've got to have that shakeout increase past this previous high, or you get a divergence. So as long as the histogram continues to rise, we're congruent. If not, this is what we were talking about before. You could have a higher high with lower potential readings, and that's a recipe for pullback. And that often happens when you break out to new highs and you see it retest back to it, and usually goes a little further. Same concept. From an NQ standpoint, not as much NVIDIA, dragging a little bit on that, but again, strong separation here between magenta and yellow from that, and similar from a DOC, not quite as strong because the DOC red not quite there, but still a negative shakeout. So you don't have the markets in agreement yet, and whenever you have those indices fading, you're going to have effectively an arbitrage situation where between the two you've got a situation where one has to increase or the other one has to decrease for them to return back into alignment, and that usually fits itself within the readings we get here. So we should be able to see a catch up of the NQ to the S&P, or you're realizing that money flowing into the S&P is stupid money, foolish run trying to catch up to something that isn't there. So we just continue to watch that to monitor where that is. Treasuries, nothing, no help whatsoever, and it's that time lag. And again, my argument being is that the Fed wants these continued rates to continue to acquire more treasuries at the higher rate before they then reduce, and that gives them that profit leverage to make up for their enormous balance sheet. Oil, not doing anything significant at this particular stage, and until that changes, you're just going to get this muddled along effect. Euro still holding up well, and of course the Fed feeding them limited cash capability, dollars not going to change. But as the tariff impact hits it, I don't see how the euro can stay up there. They're going to have to keep buying dollars relative to euros, so that volume of selling of euros is going to be significant. Gold, very excited by all this because it just means more deficits, more spending, more quantitative easing, and that means devaluation. So Bitcoin, still suffering from the NBI white lead, but now you've got magenta climbing over that. That is a short cover rally kind of setup. So we could start to see a rebound effect in there, and likely to see the same thing from ETH, but a little bit closer to having the crossover, and certainly nowhere near the short interest relative to NBI white. So much stronger from that aspect. And what we saw for the 50K, there it is, your beautiful, what some people might call double top, but it's only a double top if you see that fade. And we're likely to break out to these new highs. As you can see, it already pushed them, so now it's just a battle in between there. Interesting that you've got the rising azure, which you look for when you have rising gold, that it picks up, and that's your indication that it's filling that softening of the gold right there. But again, shakeout's still negative on that, but you're still relatively close to the highs. So from the intraday, having the swings is just about capturing stops and clearing them all out. Our case, it worked there too. That's why they do it. And you can see we had mostly momentum build up throughout the day. That gets too many call buyers in there, and so boom, collapse it right after the NVIDIA report. That was the draw, but mostly bought back up, and then in the Asian session pushed it all the way back up, nice and clean. and in the European session, a little bit of softness going into it. But likely that's going to be absorbed as a company within it. But people are going to be looking for that broader trend to see if this whole data center AI situation and restrictions on chips and where they can be sold, how that all gets played out. Because that's been the primary mover of the market. So anything happening in that space is certainly going to have an impact on the broader situation, at least in the short term. Again, everyone's still going to be looking at the amount of investment into the U.S. and how that starts to translate. And again, like I've talked about, the whole change in the immigration and reducing the number of people, that's deflationary, despite what some people understand about things. And so you get this back and forth kind of equilibrium, and this is why they've been so confused about tariffs, inflation, and that, because it was necessary to have that decoupling of not bringing in additional people to tighten the demand on limited resources. And as I've pointed out countless times, that ability of you to choose which product you get in this type of economy is not the way it used to be way back when there was a limited supply of different things. So this is why companies have had to eat the tariffs, because the elasticity of price movement is not there. And that's just classic economics, basic stuff. For a 5 minute there, though, we're still looking at it's pretty reasonable in the holding up. But that's the broader view of things. As always, anything relevant, I'll put it on our Skype chat. Skype chat, team chat. Have a good one. Trade well.